Let's take a look over at equities are trading slightly lower today. We have them pulling back, and we've had some pretty strong moves. Obviously, we had, if we take a look on Friday's move, a huge pop. We had the Jackson Hole speech. The market was selling in, the fear leading into it. And then when the news comes out, boom, the market popped and really took off. We saw a broad market rally. In fact, a very strong broad market rally where the NASDAQ and the MAGs are actually underperforming and not showing as much strength as the others. And we can see that with the Russell 2000. We saw a very big move in the Russell 2000. We saw dividend stocks. If we take a look at SPYD, they had a very big day as well. And so we're seeing money across most stocks in general, small, mid, micro caps, moving higher, and that's a good sign. And we can see that also here with our FOMO indicator. It was a massive spike when it dwarfed all other movements in this space. So people were just piling in. They don't care what price they pay. They're getting in for the markets, and that's more or less what we've been positioned for. And over the past week or so, we've locked in gains with our Bitcoin trade. We've closed that out right near the highs at this point, which worked out very well. We've locked in gains with our silver miner play. We've locked in gains with our communication sector play. And we're just letting this market continue to mature, and things are working out and moving. But today, the equities market is trading down about 0.4%. And that's nothing more than it was a huge news-driven move. As we know, most or all of those moves can be given back within a day or three. And so we had everybody pile in on a Friday, which creates an extra strong move, short covering, all kinds of stuff. And so some of that is just being given back today, a little bit of a sell-off, not a sell-off, but a bit of profit taking and some selling going on. So don't be alarmed about any move down today. That should be expected, potentially even for a couple of days. Now, if we take a look at the VIX, we saw some pretty serious, we saw fear starting to rise, and then suddenly, boom, there was no fear in the market. We also saw this with the put-call ratio. And this one we talked about in more detail a couple of days ago. When we see the VIX move up here, or not the VIX, sorry, the put-call ratio move up, these are short-term indicators that tell us people have sold their positions and now they're buying leverage, betting on a falling market. Pure emotional, pure top pickers. It's just the way the market moves, and it gives us insight as to what's going on. And if we were to look at the SPY on this, you can see here the market, we saw people buying put options right as the market started to, well, more or less put in a bottom, and then the market went higher. We talked about this last week. We said, listen, we got two people here, two days of people buying more put options, betting on falling prices, meaning they've sold their positions, which is why the stock market went down. Once the group of people who are going to sell have sold, then they start to buy leverage and bet on a falling market. And of course, now the market is starting to pop. And this is very typical. Typical emotion is just a lack of, it's just herd mentality. It's a school of fish. And that's what I love, is that we can take full advantage of this and it gives us insight as to what the market's doing. And of course, we usually do the opposite of what most people are thinking and feeling. And so do our positions. We take on the opposite side during those environments. If we take a look at some other asset classes, let's take a quick look at bonds. Bonds, a little update. Overall, ugly, noisy chart, still in a downtrend. At best, it's going sideways and trying to build a base before going higher. If we take a look over at gold, we've seen gold and silver holding up and moving up slightly here over the past couple of days. Had a nice pop on Friday. Gold up. If we take a look over here at silver, both gold and silver are down slightly today, but they had a nice pop on the news last week. And so we're just seeing, money kind of move around. Bonds are a dead play. I wouldn't be excited for anything there. Gold and silver and miners still are in an uptrend. They're just in the middle of a bull flag pattern. And of course, I think it's just a matter of time before they pop and break and run even higher. If we take a look over at oil, we've got up 0.75%. It's really trading sideways and kind of drifting to the upper end of its range. We talked about this last week, how a lot of times we see commodities have this hook, meaning, let me grab a tool. We see it start to trade sideways and have a pause, and then eventually it'll have a little squeeze up, a little bit of a hook. And the shorts who are betting on it falling start to cover, and it creates a strong pop and push up into resistance, and then it can sell off. It's kind of the same in a downtrend. When the market goes down, it has somewhat of a controlled move and then has a bit of a hook up. Over here, it gets the shorts out, it gets people thinking bullish, and then suddenly the selling steps in and it goes lower. So where this little hook up here could get the shorts to get out, thinking oil's going up, and once it gets them out, then it goes lower. Typical kind of mass psychology and running of the stops, the shorts, short stops, that is. If we take a look at the longer term chart, this is the weekly chart. Well, we know when there's bull markets, when there's bearish phases in the market, when not to hold stocks. Of course, we just had to find a little reset in place, and we're back into a bullish environment. So the underlying trend, the longer term trend, is up. And of course, this is one of the reasons why we're also back long the equities market, riding these longer term. This is an underlying swell. And then, of course, we're riding the shorter term waves with our trades on the indices and sectors. So let's quickly just flip to our custom sentiment chart. Now, if we take a look at this sentiment chart, we can see when the market is going down, we have dark red and orange bars telling us there's lots of selling. You do not want to be holding this. The sentiment is so bearish. Everyone is selling, big distribution selling. When we're in an uptrend, we tend to get green bars, and usually short-term pauses and pullbacks are usually where investors start to get a little bit nervous. They dump shares, and of course, as they sell and get fearful, the market usually rallies after that. Now, we had a little bit of a market trend reversal, trying to figure out what it's doing. We had a little wave of fear. And as you can see, this is the S&P 500. We do have a dark green bar here telling us we've kicked back into a stronger wave. Now, if we go and we look at the NASDAQ, now this is just a sentiment chart. The NASDAQ is still orange and struggling here, and it hasn't really broken to new all-time highs or pushed up. So it's underperforming a little bit. And I do think this can be seen a little bit of a bearish sign. We kind of want this sector to lead the way if we're, long the markets or this group of stocks. But overall, I think the news that came out was more broad market based, which is why we saw the Russell 2000 up 4% on Friday. We saw all other stocks. So I think money was actually moving from Magnificent Seven to Summer Guard and redistributing into the small, mid cap and micro cap stocks, trying to get more leverage out of the market. So we'll see if the Magnificent Seven and the NASDAQ will get some leadership and start to move higher and turn green. But overall, you can see how we go through these waves of bearishness and then bullishness. And the NASDAQ is showing sentiment-wise, it is more of a broad market rally on Friday. But keep in mind, it's a one-day blip on news. And as we know, we can't really trust anything. We have to let time and let the trends continue to play out. And that is pretty much what we follow. Anyways, that's it for now. Take care. Bye-bye.